I'm Matt Bouchard with NAREITWeek.com here in New York City for REITWeek 2016, NAREIT's Investor Forum. Joining me for this CEO Spotlight is Greg Stapley, President and CEO of CareTrust REIT. Greg, thanks so much for joining us.
My pleasure.
Now, it's been 2 years since CareTrust spun off as a public REIT from the Ensign Group. Can you talk about how the company has evolved in that time?
I'll tell you, it's interesting. Some days it feels like everything's new. We started out, we were a genuine startup at the beginning 2 years ago this month, but it was weird because we had $56 million in revenue, but we didn't have a pencil in the drawer. So it was like going to Office Max one day and trying to figure out where to cash the check the next. It was quite interesting. But at the end of the day, I've been personally involved in acquiring healthcare real estate for 17 years now, and in real estate for 30 years total. So it's really very familiar, and stepping into the REIT model and doing what we do has been very comfortable for us. In that time, we've grown ourselves quite significantly. Our Ensign revenue was 100%. Of course, on day one. We're down to about 57% on a run rate basis today as we sit here, so we're running well ahead of pro forma on that. And we've built a team and a structure, and I think maybe the best thing that's happened in these 2 years is we've distinguished ourselves, I think, as a reliable and reasonable counterparty, somebody that the seller and brokerage community really wants to do business with. And that's gratifying because we're seeing a lot of deals.
And can you talk a little bit about the state of the company's balance sheet, particularly your recent overnight offering and the retirement of some legacy debt? We're
really proud of where our balance sheet has come in the past 2 years. Coming out 2 years ago, we were almost 7 times levered. It was a tough environment for us in a lot of ways. We had a lot of secured legacy secured debt that we had to keep in place. But today, as we sit here, we're less than 5 times levered. We've done 2 equity offerings now. We have gotten rid of all of our secured term debt and replaced it with unsecured revolving debt. We have no lease maturities, no debt maturities coming up sooner than 2020. And maybe best of all is, we've seen our credit ratings upgraded in the past couple of months. S&P upgraded us a month ago from B to B+, and just yesterday we got the announcement that Moody's has upgraded us from B2 to B1. So those are little steps, but they lower our cost of capital over time. They should improve our profitability over time, and they're just a progression on our upward trajectory. So we're excited.
And lastly, as you look out over the next couple of years, what do you think is going to be the driving trend in the senior housing market?
Boy, that is anybody's guess. But I think there's some interesting things going on right now that we see. We continue to be particularly interested in skilled nursing, and the changes that are happening there. Change is constant on the skilled nursing side, and people get nervous about it because if they're new to the space, because they see that change. But having been in it for a long time, we're accustomed to it, and we can see how it can be dealt with, and actually function opportunistically to take advantage of those changes, because change is opportunities. On the seniors housing side, I think you're going to continue to see a lot of the traditional AL kind of opportunities that you've always seen, but there's also going to be this shift as the baby boomers age up into a different kind of an IL product that's more of a lifestyle product that's co-located with other amenities, retail and city center and things that are walkable, so that you have an environment where you're part of a real community, really part of the real community, as opposed to part of this sort of fabricated community inside the facility, if you know what I mean. So I think those are really interesting trends that we're watching and trying to capitalize on.
Greg, thank you so much for joining us.
Our pleasure. Thank you.
For more from REITweek 2016, be sure to visit REIT.com.